Yeah. Okay. So we're gonna be doing a thing. Someone said he wants us to do the supply and demand thing, right? So now with that supply and demand is pretty simple because what you need to know uh is basically when you're having a candle like this. All right. Let's say it's a bullish candle. Oh, it's a bearish, then we're gonna get a bullish candle here, right? Uh that's a bearish candle. This one is bullish, right? And anyway, we're gonna have something like this. And the market, it's been, say, it's been moving, but it's been bearish, right? It's been bearish. Right. So basically, what, what you want to see, your thing, your what's this? Your demand, né? Your demand, what you need to know, it's when the market is moving like this, right? You see, it's bearish, and then all of a sudden we get a swing low, né? We form a swing low. Oh, this can be your swing low, right? When we form a swing low, you just check the close of this candle. See this candle. The close of this candle. If it closes above the close of the previous candle, you see this candle. So you want to see something like a, what's this, engulfing, yeah, engulfing pattern. That's what you want to see, all right? And then once you have something like that, normally I highlight that candle like this, right? And then if the market reverses to the upside, a bullish candle here, that's a bullish candle, right? Uh, get a bullish, then let's say we get another bullish upside like that, right? And then what's gonna happen? That candle, you see that candle, this one, it must close above the thing, the previous candle is closed. This one, it closes here. You don't want to see something like this, right? Sometimes you can, but I'd advise you to wait to see something like this. This one, it must close above, not below. Once it closes above like this, then we take the high, which is that high, and then we want to see these markets trading away, right? You want to see it trading away from that demand. That's a demand zone. You want to see it trading away, and then you want to see it coming back, and then that's where you want to be buying, right? That's where you want to be a buyer when it comes back to that candle's closed. You see where it closed. If it closed here, then the thing is supposed to be, and then as soon as the market comes, you're a buyer, and then your target, most of the times, you can target that high like that, right? So that's what makes the thing, the demand zone. Once you get a swing low, you want to see it engulfing there, right? And if we engulf that previous candle, now we're gonna move from that area. Sometimes what you're gonna see, maybe here, you're gonna have maybe the supply zone, you can be there, or maybe what's the resistance line? I think something like that. And then if you buy, you can be looking for these markets to come to that resistance level, but most of the times it's gonna trade above that resistance thing, right? So once the market is here, you want to make sure it comes back. It can come back even here, right? It can come back even here, right? But the most important thing is this thing is if here we had a swing high, if we had a swing high here, let's say it was a bearish candle, we had a swing high, that's a bearish candle. If we get that swing high, and then if the market it trades above that swing high, right, then the market is somewhere here. That's when we wait for the market to come back to that candle, right? Most of the times it's gonna be valid when it trades above that swing high, confirming it wants to go higher, right? And then you can wait for it to come back to that last candle, right? And then you can be a buyer there. You understand? Then let's see. We see. Do you have an example here? Okay, let's take for a buy. For instance, if we had this. All right, so okay, this one is not clear. This one is not clear because most of the times okay, but okay, we can use this one, right? Let's say the market is bearish, and then we take that high like that. That's the swing high, right? That you want to see. That's the swing high there, right? Then once it breaks the swing high, it will come back. So when it comes back, it's gonna come back where to the demand zone. So how are we gonna see the demand? That's where I said you're gonna be looking for what? For the last candle. You see here, it's been bearish, and then you see that last candle before the market went higher. You can take that like that, right? And then when the market comes back, you can be a buyer there, which will stop here. So normally you're gonna have a demand zone there. You can also have it here. Right, it's still valid. You can also have it there, right? It's just that you never know which one you're gonna use. That's why you're gonna need your confirmations and stuff, right? But that won't be the part of this video, right? So now, so now since we went higher, we took the high, right? Now we're coming back, right? So same thing. Okay, it moved. So we went higher. We come, we buy, and then I set your target. It can be here. That's what you can be targeting, right? And then you can look for what I said. Maybe you see that's what's this? What's this? Is it the resistance? Something like that. See, that was the old thing, the old resistance. You break, they sell. When they selling, you collect the stop losses, and then the breakout. They want the market to retest here. As soon as the market it breaks, they want the market to retest. They put their stops below here, and the market it has the stops. You see, so normally what you need to wait for the market to take that swing high, and then the zone, and let the market comes back, and then it goes higher. You understand? For example, even here, this one's perfect because it's straightforward. You see, you had that. Or see, you take that swing high, goes, and then it comes, right? And then it comes back to that last candle, like that. Then it can be a buyer, right? But because obviously here, the expectation was to see this market running there, you can buy, see it hits that level. Understand? I hope it's clear. And then for your supply, because this is your demand, right? your supply is going to be the opposite. For example, even here, see the market, it takes the swing low, right? After we take that swing low, I said the last here, you're going to be using the buy candles instead of the sell. So you're going to be looking for the last buy candles like that, right? You take even the wick, you're going to also include that wick there. Then you take that swing low, come, and then they supply, then they drive price lower. You understand? So it's simple, just like that. The target, it can be maybe here, because you know you're gonna have something like this. Once they try to buy, their stops are gonna be below. So you target that low like that. You understand? And from there, you sell to the downside. The main idea is what here, because it's all your supply. You're gonna be focusing on the bullish candle before the market it went bearish, like aggressively like this. See the way it went down. That's what you're gonna be looking for. You're gonna be looking for those candles. Once you see that candle, it just highlights you wait for the market to come back to that area. You understand? I hope it's clear. Even here, it did supply its demand. You see what happened? The swing high. It took that swing high out. We come at this level, right? And then it can be a buyer there. Can target that high, or just look for a resistance, as you can see, right? And then that high, target that high, and then they come, they hit that high. You see, simple. The most important thing here, because it's the thing, it's demand. You focus on the sell candles before the market went high aggressively. You understand? That's what you want to see. The candles before it went higher. You see, even here, it didn't go higher. Like there's a difference between here and here. You see the displacement. The displacement here, it shows, let's see, it was really willing to pump the thing, to pump the market higher. You understand? So that's what you want to be looking for. You want to be looking for those areas. Candles, down candles before the market went higher. Oh, you're going to be looking for candles. See here. See the sell candle. Even if you use this one, you see the buy candle before the market it went lower aggressively. So even that one, it's still your supply zone. You understand? Or even if you can still use that one, still okay. To understand? But your stop, if you use this one, above, if you use this one, the stop just here. You understand? So it's something like that. Here, same thing again. It's applied. Oh, they did it's the demand, right? So what happened? It went higher, came back, right? It was actually supposed to come back to the high, right? And then can be a buyer, but it didn't tap that area. See, down candle before the market went higher aggressively. That's what you're gonna be looking for if you wanna be demanding, if you wanna be trading at the demand area. So it's just simple like that. Even here, see the market has been bearish, goes higher, right? And then takes that swing high out. After that swing high out, what happened? See, it was moving aggressively even here. right? You can take last candle, which can be this, right? Then it comes back. When you want to be a buyer, only when it comes back, right? If it doesn't come back, then yeah, you don't gonna be trading that market. Understand? So simple like that. Even here, we went low aggressively, right? There was a swing low here. We took that swing low. Then this candle, right, can be a seller. They can be a seller. You understand? Again, it drops down aggressively. Swing low can be a seller. Last candle, those last candles, that's where you're going to be focusing. Your stop above that high day. You understand? So it's not really that thing that difficult. If even here, same thing, swing high out, right? And then it went higher. Last candle, see it was aggressive. The last candle is here. It can be a buyer there, right? To target, you're gonna be looking for a resistance. So we see here, whenever that resistance, and then you want to see the market trading above that resistance. See, so it's straightforward. Another example here. Even here, you see what happened. The swing low was out. We come last candle, right before the market went lower. It's gonna be that last candle. See, it was aggressive. Even here, you sell your stop above the goes even lower. All right, goes even lower. Last candle, it's this one. Can be a seller, your stop above. You understand? But now you need to confirm, right? There's a lot of things which I'm missing, right? But the most important thing for you to know, if you're talking about the supply and demand, you're actually talking about that, and you make sure it takes the swing low, right? Even this one, it took the swing low. See the swing low. Once the market takes out the swing low, it can be a seller then. Right, so it's not really that difficult. Here again, same thing. Takes the swing low, right? And then last candle, your focus is only gonna be on those last candles. See, that's, and then boom to the downside. It's even here on lower time frames. It's gonna be the very same thing, right? Something like this, so still your thing. That's this your supply, especially on heavy market. You see here, this is a heavy market. Why it was heavy? You see, they protect those things. It forms something like this. They protect the highs, so it's heavy. So when it's heavy, we know it's about to go even lower, like we expect it to shoot like this. So on heavy markets, that's where you're gonna be trading those kind of things, because you know they're not gonna trade above, or even if you took that one, still same thing. Even if maybe you were taking that one, right? It was a heavy market. You don't want to see the market trading above that high. Even here, you don't want to see trading above that high. Then you expect the market to do what? To be volatile in the next couple a few minutes or hours, depending on the time frame you're going to be working on, right? And then what else? Yeah, supply and demand are just simple as that. We come find that swing low again, right? Goes higher, and then last candle, right? Can be this one, right? Can be a buyer your stop below. Also, this is still a candle. On a higher time frame, it's one candle or something like this, right? Long as it taps, you can be a buyer. You stop there. With refinement, you can maybe even go lower like this, right? But here, if you buy, you stop there, and then once it runs the high, and then you're out. You're no longer interested, right? Because here in future, when it comes back, there's no need for you to go higher because already he took out this thing, the sell stop, which were above that level, right? We're above that level, right? Yeah, I think the supply and demand thing, I did explain that, right? And what else? I think on our next thing, on our next session, which is tomorrow. Tomorrow is Friday. Tomorrow, I think tomorrow we're gonna be doing the thingy. I'm gonna be showing you how to use the fixed range volume profile. Yeah? The whole session is gonna be based on that. It's also simple, right? And yeah, it shows us the most important parts, right? So we're gonna use that tomorrow's class, right? So supply and demand, I hope is clear. Make sure it takes out that swing high, right? The swing high, then it comes back, and then it can be a buyer. If it's bearish, the swing low, and then you wait for it to come back. There's no need for you to rush. You understand? So yeah, guys, I'll see you in tomorrow's class. Oh, let's check something. Okay, even here, right there. Okay, here are a lot of things that are happening. Right, there are a lot of things that are happening, but the entry, yes, my G, yes, my G, yes, my G. So now, even here, what was happening? You should check this on my Insta. That's the only trade that I had today. Right, not that even here, if I wanted to trade, I was gonna buy this market. There are a lot of buying opportunity. I was gonna sell, even buy, sell, right? Because I know what's happening in this market, right? But let me just explain this one. Eh? Okay, this one, with what you've just did now, is like what we take that swing low, right? Once you take that swing low, and then we coming back to this, you see, then you sell, the stop is there. Just that there are a lot of things that are happening here, the confirmations and stuff, right? But with what you're just doing now, that the stop above, then my target was just 20 handles below that low, right? And then it went 20, even more, right? But the idea is even here, if maybe you wanted to buy without even having a lot of confirmations, right? That swing high, it goes higher, and then you're gonna have that, right? And then when you have this goes higher, you wait here, it can be a buyer, you understand? So it's simple. It can be a buyer, and then it did buy. I said once you buy, you look for a resistance in this case because we are bullish. You find that resistance. So you know on that resistance, they want to buy, they want to sell, their stops are going to be above, right? So you can sell from there. You can be a seller, you can be a buyer, not a seller. You can be a buyer and target anything above that resistance line like that. See, and then you get something like this, boom, it went higher, right? Even here, you can still add if you wanted to get that swing high, it goes higher. Last candle, where's the last candle? It's here. You see, when you get that sniper, it goes higher. Your target somewhere around that resistance line, actually above, because you know they'll sell. You see here already they were selling. These markets, their stops are above, so you want to be taking their stops, right? And then out. So it's really that simple. It's not really that difficult. You understand? Here it also did the same thing, but here, right, went higher and then it came back. Just that it didn't go deeper to that candle. They just came back to this one, buying, and boom, it went higher above that level. Right, so see you tomorrow, guys. We're gonna be doing the fixed range. I'm gonna show you how can you use that. It's pretty simple, and yeah, I'll see you tomorrow, guys. Thanks for joining. I'll see if I can upload this one on YouTube. I'll see if I can do that, and if I can, you'll find it there for reference. You understand? So see you tomorrow, guys.